Hello and welcome. This is Traders Next Door. I'm Ed Kartashabe and you're about to hear the latest scoop. Today is the last NFP before year's end and the last NFP before the FOMC meeting happening on the 18th of December, and it is going to be a pivotal one. Right now, we're going to see how the labor market has performed over the last month, and this is going to inform what the Fed is going to do moving forward. A lot of analysts have been surprised about the US economy's resilience over the last few months, and even though we had a shocker of a number of only 12,000 jobs added for NFP last month, and this was due to various different influences such as hurricanes and natural disasters and the like, but we are expecting a much healthier 218,000 jobs added this month. So this result, if it holds true, is going to look very good for the US economy and bolster more of that US dollar strength that we've been seeing up until the end of 2024. However, if we were to get another big miss for whatever reason, this could signal to the Fed that it needs to change course. Jerome Powell has already gone on record stating that they are going to be a little bit more cautious in their approach into 2025. Initially, the market had predicted that there were going to be 4 rate cuts this year in 2024 and a further 4 rate cuts in 2025. However, with persistent economic strength and slightly sticky inflation muddying the waters of how things have been the last little bit, things are not quite looking as clear. Inflation is not exactly where the Fed wants it just yet, so Powell might delay any more meaningful easing if the current situation holds true. And if the Fed does end up adopting a wait and see approach, then the markets are going to have a very large reaction to that, both indices and currencies alike. So this is going to be a very interesting next couple of weeks, seeing what the Fed is going to do and how they're going to tackle the economic situation that we've been having currently. Throwing another spanner into the works, the Fed also has to contend with the current geopolitical situation that we have right now with Donald Trump versus the BRICS nations. Donald Trump has gone on record saying that he plans on imposing 100% tariffs on the BRIC nations if they go ahead with their plan to de-dollarize international trade between their borders. The reason Trump has gone with that approach is he is trying to safeguard the dollar's position and status as the global economy for trade. So he wants to do that, but this could ignite some retaliatory movements and strategies from those nations if they do intend to go ahead regardless of the 100% tariff threat. The reason why tariffs are so important is because tariffs translates to higher costs for the suppliers that are supplying and exporting their goods into the US. This in turn translates into higher costs for the consumers purchasing those products, and this drives up inflation. So inflation is what the Fed's key focus point is. So if inflation starts to drive up significantly again, it's going to make the Fed's situation a lot more difficult to contend with. So looking forward, most analysts are still predicting a 0.25 point cut coming now in the Fed's meeting in December, but thereafter things are not quite as clear what's going to happen. Today's NFP is likely going to be an important headline, and these numbers are going to determine exactly what the Fed is looking towards doing. If the NFP numbers come out as expected or beat that, you can expect DXY to climb up and infuse a lot of dollar strength into the market. Conversely, if the numbers come out significantly weaker than we expect, this could trigger the first dollar sell-offs that we've seen in several weeks. So one thing's for sure, whether the numbers come up higher or lower, volatility is going to be the name of the game. This is going to be a very important NFP. Historically, NFPs that happen in December tend to create large moves. A lot of people are trying to get their last little positions in before the year ends. So a lot of money is going to be pumped into the market during this time historically. So we can probably look at a large NFP happening today. So if you're looking to take advantage of that, you can go ahead and purchase yourself a Vault Funder account and make the most of that opportunity. Whether sells or buys, the moves are likely to be volatile, they're likely to be quick, and they're likely to provide a lot of opportunity for massive profits. You can go ahead and use the code FISA, F-I-S-A, to get 35% off a Vault Funder account today. And people who have already taken advantage of that are the people who are in the Ultimate Trader. We have the current stats of how the Ultimate Trader is doing. We're coming at the tail end of week 5. It is an epic combination. That top 3 having the first little shuffle that it's had in 2 weeks. Amina Samai joining the top 3 in second place. Her biggest trade being a whopping 8,185 Madiba Rons in a single trade. She is joined by Vessels, who is in first place, and Khaf heading in third place. That top 3 still open. We have a couple people in contenders in that top 6 who could depose the top 3 positions. So it's still anyone's race. But with only 1 week and a bit left of trading, we will be crowning the Ultimate Trader come Friday next week. So it is going to be hotly contested. Be on the lookout to see who is going to be crowned this year's Ultimate Trader for Season 2. It is going to be a spicy result. It could go any which way still, which is quite exciting for the fact that it's been a 6-week competition and anyone can take that top spot. So we're looking very much forward to seeing who will be the Ultimate Trader. I've been Ed Katashabe. This has been Traders Next Door, and you have just heard the Daily Scoop.